Hello traders, welcome to Market Edge Ahead of the Trade. I'm Owen Larson with Mission Winners. This week started with some early hope, maybe a little spark, but by the end of the week, that spark faded fast. The QQQ rolled over, we saw increased volume on the sell side, and key ETFs across tech, software, and retail showed heavy weakness. On the other hand, gold and silver continued to shine, and energy showed some resilience. So where's the strength? Where's the opportunity? That's what we're here to unpack. Let's start with the ETF breakdown and see where the real story is hiding.
Here we go. Spiders, weekly on the left, daily on the right. What do you see here? Well, don't overthink it, folks, okay? I really mean this. I've been doing this a long time. I managed a ton of money into the crash of 87, the whole 9 yards. The trend is down right now. It may change this week. I don't know. But we don't need to know the future. All we have to do is watch the present, and it will tell us what to do. We'll combine price with volume. You can see it's fallen on fairly heavy volume here on the weekly, and also the down volume spikes on the daily. Still, we start seeing some lift. Just be a little cautious. That's all. By the way, I'm not being bearish. I'm just pointing out what is. Get in line with what is. It will make your life easier. Never argue with what is. Just get in line with it. QQQ, same situation. NASDAQ 100 tells us to be a little cautious right here. And if you notice, falling on increasing volume here on Friday. So just be a little cautious. Maybe it's going to bottom to next week. And that's why we do these videos. And that's why I always have a list for my clients. Why? Because we're always ready for the team. Here we go. Continue onwards. ARK Innovation, a lot of weakness here. Tells you to be careful with this group, this industry. All right? It's dropping here. Leave it alone. Next generation internet, a lot of weakness here too. One saving grace though, this does have a higher low here that may lead to something. Something else, it's falling on substantially less volume than it went up on in here. Something to watch. But remember this too, it's below the falling 50-day. I said this at the IBD meetups for years. The air is better above a rising 50-day. You go, that's kind of simple. It's the truth. The air is better above a rising 50-day moving average line. Like, look at right here. Falls down to the 50-day. What's the 50-day doing right here? It was rising. That's the green moving average, by the way. And it bounces off of it, and it makes a good march. Okay? Here it is now. It's below the 50-day. Good lesson right there. Let's move on. Biotechnology's lagging here. Not a lot of power. Be careful with biotechnology. Energy doesn't look too bad. It's above the rising 50-day. It ran up. Look at this. It ran up. Folks, I want to share something with you. And again, I have degrees in psychology. Charts are a reflection of human emotions and decision making. It's reflected in the charts. Look at this. The high on this bar is 67.08. Runs up and then drops and whips all over. Runs right back up. The high on this bar is 67.11. 3 cents difference. And what's it do? Runs up, reverses down, and drops. You go, why did that happen? Do you think there were people that bought this up here? Yes, of course there were. Be pragmatic. If it didn't go up to that price, nobody bought it. Somebody bought it up there to get it up to that price. Runs up, falls. Who do you think was selling when it rallied back up there? People that bought it here go, thank heaven, FO, I'm back near my price, I'm selling. There you go. That's why double tops form. Most people don't know that. Most people don't understand it. Now you do, and it's yours. Let's move on. Nothing to do with it now, just be a little careful with energy. Dow Jones Internet really lagging, be careful with Internet. IBD 50 is lagging, be careful with the IBD 50. Gold miners, been good for us. We bought this down in here. It's been a good run, and we've sold into strength some, so we're in good shape. There's nothing to do with it now, but that's what's going on. Let's take it here. Gold. You can see where we bought gold here. That's pretty simple. There's another buyback here. It's vanilla. Easy to see. Nice trend. Note the trend up the ADMA. This thing went up this week when the market was kind of ugly. There you go. Leading groups, leading stocks. This is a leading group, and that's why we're in it. Cybersecurity, this baby's been hacked. I had to say it, I'm sorry. You got to have fun here, too. It's from years of being a Boy Scout leader, you know? You got to have fun. Anyway, going sideways here, but now it's down here. It's lagging. Be cautious with that. Nothing to do with it. Biotechnology, lagging. Be cautious. Online retail, lagging, nothing, no power there, be cautious. Expanded software technology, this is lagging also, be cautious. Need to pause here and share something. Don't think I'm all negative and bearish. I'm just pointing out what is. There's no power here. Leave it alone. It will make your life easier. It does something very important too. When we accept reality for what it is, it lessens stress. Just observe it and know what it is and act accordingly to what it's telling you. Right now it's in a downturn. Leave it alone. Could change next week, but leave it alone. Medicine, kind of lagging here. Be careful with that. Mid-cap, lagging. Be cautious. Aerospace and defense, it started to run up. Look at that. Look at the volume pickup. Tell me people don't see what we see. Look at that simple base that I drew. And it lifted through that top. Look at the volume pickup. They voted. And it runs up, and then it stalls. Why do you think it stalled? Well, partially function of the market. It's just the way the market is right now. It will change, though, believe me. It may change this week. I don't know, but I will tell you this. In Mission Winners, we will be ready. That's it. That's the way I'm wired. It works. Home constructions, not so good. S&P 500 growth. Look at this drop in here. Be cautious with S&P 500 growth. All right. You can always see the name up there. Russell's lagging. Be careful with small cap stocks. Real estate, not a lot of power there. Just back and forth. And you can see there's selling volume on the weekly. Be careful with real estate stocks. Transportation, there's nothing there. Leave it alone. Airlines are grounded. I love saying that. I just think it's kind of fun, you know. But airlines, there's no power at this point in time. It will turn and it will fly. There's another dad pun for you. But right now, there's nothing to do with it. Just leave it alone. It's not even taxiing on the runway. Continue onward. Banks lagging. Be careful there. Insurance showed some life. Started to lift up. Take a look at this bar right here. And again, I try to educate in these videos. Knowledge power that you now own, and you can use it going forward to make better investing decisions and more money. On this bar, oh, it's breaking out, Pat. Look at this. We're going to slide this over to really be specific. Okay, yeah, it's getting close. Oh, look, it lifts up. Look at that. It's going. This is it. It had less volume going up than it did going down. They're not buying it. It's shown in the charts. Price combined with volume action. It does this and just chopping around. There's nothing really to do with it at this point in time. It could change this week and we'll be ready. Regional banking, lagging, leave it alone. Mid-cap lagging, leave them alone. Oil services in a downtrend, leave it alone. I mean, look at this. On the daily and on the weekly. This is a great template, by the way, folks. Again, weekly on the left, daily on the right. I put this together years ago. It's my go-to template. I love it. Pharmaceuticals, not a lot of power there. Be careful there. NASDAQ 100, getting close to hitting weekly lows. It was a weekly close. It's falling on increasing volume. It's in a downtrend. Now, it may change next week and we'll be ready. But for right now, there's nothing to do with it. It's that simple. Keeps you safe. Remember this, folks. Part of making money is not losing money. Good way to not lose money? Don't do things that are not conducive to making money. That sounds really cute and funny. I mean it. We have the discipline to wait for our setups. And they make us money. NASDAQ 100, it's a weekly close, by the way. A weekly low close right there. Falling. It's in a downtrend. Just be cautious at this time. By the way, again, I'm not being bearish. I'm just pointing out what is. I hope it helps you. But I'm also trying to educate what to look for. Okay? Retailing, lagging, just kind of be cautious with retailing. Cloud computing, new weekly lows, there's nothing to do with it. Silver, oh, look at this, another precious metal. Doesn't look too bad. It's kind of trending up. There's no real clean entry on it, though. There was here, okay, going across here, but there's really not much right here. So until you see a cleaner base with it, leave it alone. But it's one to watch because it is acting fine. What two other ETFs did I show you that didn't look too bad? I said, oh, we own them. The gold ones, gold and silver. There we go. Steel is kind of choppy here, zigging around back and forth. Be careful with this. When you see something going up and then it gaps right back down, it tells you there's no investor conviction to stick with it. So just be cautious with that. Semiconductors are lagging, leave them alone. The other semiconductor ETF is lagging, leave it alone. Software, the S&P 500 leveraged. I love this ETF, by the way. Let me tell you. Just chopping around here, leave it alone. In fact, I want to show you this. This is why I look at weekly and daily. This is a weekly low. This is a new weekly low close. There's no power here. It can change, and we'll be ready. We're always ready. This little routine I do this every day for the team. Every day. We're always prepared. Always. Solar, lagging, leave it alone. Small caps, lagging. I mean, look, it's a new weekly low close. Stay away from small caps. And again, that's why I do this. It's like, well, here's some opportunities, but here's some things to avoid. And I like that a lot. Nothing to do here with oil. Aerospace and defense, nothing to do with it. Biotechnology, they need drugs. There's nothing to do with it. Home builders, lagging, nothing to do with it. Materials, kind of choppy and sloppy. Downtrends, leave it alone. Communication services, lagging, leave it alone. Energy, now that one doesn't look too bad. Look at this. Lagging, Oh, look at that, near highs. Look at this, rallied up, pulls back. Maybe it's going to form a handle here. That's something to possibly watch this coming week. If the market's okay. This is one of the better looking charts right here. Energy. Financials runs up to the 50-day and they take it right back down. Be careful. Industrials lagging, runs up near the 50-day, falling, drops right off of it. Technology, look at this. I mean, this is a powerful thing to know right here. Technology ETF lagging, that tells you, be careful. Be careful even with technology. Good to know. Consumer staples is starting to pick up. You can say, why would that be? I want you all to think about this. There's a lot of things you don't need. You don't need a new cell phone. You don't need certain technology things. You don't need it to survive, okay? Consumer staples, food, you need stuff like that. It's more defensive, and that's why it's acting okay. It's a defensive sector. Most people never really ponder that and chew on it. At Mission Winners, we do, and we use it to make better decisions. There's really nothing to do with it here. And again, you can say, well, it's turning up a little bit, but then you look at the weekly, they knock the tar out of it. There's no really clean and simple entry here, and it just says, be cautious. There you go. Let's move on. Utilities lag and leave it alone. Healthcare's lag and leave it alone. Consumer discretionary. You see this dropping here? The consumers pulled back too. It's reflected in the chart. There we go. Metals and mining, a little lag there. Oil is lagging. Retailers aren't being bought. I don't mean that to be funny. It's just not. Software's kind of underperforming. And then we go back up to the top.
So there you have it. Clear signs of caution, leadership fading in growth sectors, and defensive names like gold and consumer staples starting to attract money. In this kind of environment, discipline matters. This isn't the time to chase. This is the time to get tactical. Just a quick reminder, we now have a YouTube membership, which is a sneak peek into the VIP experience. All you need to do is click the join button below the video on the left side, or if you're ready, you can visit our website, missionwinners.com, to see our full VIP membership plans. Okay, now let's get back to today's lesson. Let's open up the tactical playbook, because this isn't a market where you just chase green bars and hope for the best. This is where discipline pays and clarity protects your capital. At Mission Winners, we're ready with a key list every single day ahead of the next session's open. But here's the deal. Just because it's on the list doesn't mean we take action. We only act when price confirms, and only when the market is supportive. This past week gave us a clear look at what it means when leadership begins to break down. Palantir showed up across multiple key list appearances. It was shaping up but never confirmed. That's not a failure. It's protection. If it doesn't trigger, we don't engage. Same story with Meta. It looked ready, but didn't move through its level, and now it's fading. That's the market saying, not yet. And we listen. Tesla had several key list appearances too. It rallied but couldn't hold those levels. That tells us something about market tone, especially when former leaders can't get traction. Okta was also on our radar. But the inability to reclaim short-term moving averages shows us the buyers just aren't there yet. That's not a setup. It's a signal to step aside. Then you've got companies like Alibaba. It held up better than most this week, which is notable in a weak tape. Sometimes not falling apart is a form of strength. Now let's get tactical. Fake strength, it shows up in three ways. First, a strong open that fades into the close. That's not demand, that's distribution. Second, setups that poke above resistance and fall right back. That's indecision, that's weakness, and that's not what we buy. And third, we look for relative strength, but we demand that it holds over time. One good day doesn't make a leader. There were a few names this week, some in the metals and biotech space, that showed that kind of strength. Holding their levels, resisting the fade, that's where new leadership often begins. Bottom line, we don't chase charts, we don't predict, we prepare. The key list gives us clarity, and we let price and volume lead the way. That's how we stay focused, that's how we stay ready, and that's how we keep our edge. So now that we've covered how to stay tactical, let's talk about where leadership might show up next. If it's going to appear, it'll likely be in the max list, those institutional darlings that big money gravitates toward when the wind shifts. Let's take a look at where they stand right now.
Continue onwards. Let's take a look at the max list. Apple, the green line's the 50-day moving average line. And this is something I said at the IBD meetups for years. The air is better above a rising 50-day moving average line. Okay, and this is the weekly, okay, 50-week. And you can see on the weekly, it's falling on increasing volume. On the daily, it's falling on increasing volume. It's below the moving averages. Now, here's something, an interesting lesson for you, for all of you. Key moving averages. This is the 50-day simple. This is the 21-day exponential. Some people use the 20-day simple. I use the 21-day exponential. I like it. There's years of research behind it. But notice what it does. It rallies right up to the 21-day exponential and backs off of it again. So until it changes, be careful. Now, here's what it could do, though. This could reverse. I'm not saying it will, but if it takes out the highs of these two bars across here, that could be a potential buy. If the market's strong also. The ammunition winners, the markets. You need that too. Let's continue onwards. Again, on these videos, I don't want to just give ideas, okay? I want to educate. That's my background, is explaining why. When you understand the why, that foundation is yours. It's yours from now on, and you can use it to make better investing decisions and more money. And that's what I want. Let's continue onward. Amazon lagging. This ran through here, rallies up, and it's just a poster child for the market. Run up, there ain't a lot of power, and they take it right back down. Just says be cautious. Also note, it fell on increasing volume. Be a little cautious with that. There we go. That's a daily chart. Same thing's true with this one, the Direxion Bull. Continue onward. Alibaba, basing right here. Oh, by the way, I have to show you this. This is $200 a share, and this is $30 a share. Basically, you can own Amazon, okay? Price movement in the Amazon for a lot less cost. And it's plenty fluid. It does plenty shares, a lot of volume here. So it's not like you're buying something that's really thin where you can get stuck. There you go. Just wanted to clarify that for you. Alibaba, we own Alibaba. See that simple base? You see the volume that came into it? Right through here? Look at the volume pickup on that bar. Make that a hair bigger for you. Right there. Added, and it's working. We're in a crummy market. This is a big move. And we're in it. I'm not bragging. The work paid. Doing the work. And now it's just chopping here. What would I like to see? If this market turns, just a game plan, and this starts to take out the tops of this bar here, write this down, takes out the tops of this bar and or this bar, in a good market with good volume, it could be a potential buy. Now there's a reason why. It would be bouncing off the 21-day exponential moving average. That's the blue moving average. There you go. Now you have a game plan. That's what we do. BIDU is kind of choppy, kind of whipping around here. Now look, it's going up. Oh, it's going up. Oh man, they knocked the tar out of it. A little loose here. Be careful with that, just for what it's worth. Goldman Sachs is lagging. Look at that. There's nothing to do with it. Leave it alone. Google is lagging. It's going to turn someday, folks, but now's not the time. So you just wait. Leave it alone. Sit tight. MasterCard started to lift up, and they took it right back down. But it's got clean tops across here. I want to show you something here to help you. Right there. So it lifted up, and then it came right back down. That's a poster child for the market, team. The market's in a rough spot right now. It will change, believe me. Bull markets haven't been outlawed, and yeah, we'll all be ready. That's why I do these videos, just to help everybody. It needs to lift through these tops. Until it does, just leave it alone. It's also, again, a poster child. Oh, it's going, it's going. Oh, gosh. There we go. Just be cautious. At this time, be a little cautious in the market. Meta was a rocket ship for us back here. I mean, look at that base. That's 630 up to 730. That's over 100 points, folks. That's huge. That's big tuna. How about that? But right now, this is why you don't stay married to them. Oh, look at this. The whole gain is gone. Remember this, folks. We are here to make money. We are not here to own stocks. We are here to make money. It just so happens owning stocks, our stocks, is the vehicle to make money. And we just get in line with it. Dropping down here below all the moving averages, falling on increasing volume. Meta's chopping around. Be cautious with it at this time. Microsoft, same thing, lagging. It's in a downtrend. Just leave it alone for now. That's simple. Netflix started to go right here. We bought this. Lift it up once here. Then it starts to pull back and stall. And we sell. And we make sure we don't let a good profit turn into a loss. And I'm glad we didn't, because look at it now. Now you'd have a problem. We don't. Didn't make much of a move, okay, but it did move up. 30 points, locks some in, starts to fall, you lock more in. NVIDIA, there's nothing here at this time, okay? You just got to wait. NVDA, 1.5 logs, nothing there. The reason I put this on here is it trades just like NVIDIA, but it's lower priced. See, NVIDIA's $100 bucks, and this is 38. And it's pretty much the same price movement. Look at that chart. Look at this chart. Similar price movement where you can own it, and it's plenty fluid where you can own NVIDIA for less price. There's nothing to do with it now, though. Tesla starts to go, chops around. Be cautious with it. That's oh, look, it's going up. Oh, look, up, bing, bing. Be cautious. What's it need to do? It needs to push through these tops. By the way, down here, this was a good lift. And we sold into strength and we made some money. Not a lot of money, but we made money. And now we just got to sit tight and wait, see if it can base out here. All right. Until then, we have to wait. TSLL is the leverage one. Okay. Not leverage, excuse me, like an ETF type of deal. Lower priced. It allows you, look, there's the Tesla chart at 270 bucks. There's TSLL at 10 bucks. Basically own it for a lot less. There you go. Just pointing out, there's really nothing to do with it, though, at this point in time.
That wraps up this week's Market Edge, ahead of the trade. Huge thanks to Pat Walker for another deep dive into the charts, and to all of you for tuning in. If you found value here, make sure to subscribe, like, and leave us a comment below. Check out missionwinners.com. And remember, master your strategy, trust the process, and maintain your edge.